Let's talk about your views of Africa at the moment. Obviously, with higher growth rates, banks are becoming more fundamental to the whole nexus of development, credit flows, commercial and retail banking. Where does microfinance fit?
Sure, great question. As Africa does become more connected and more integrated into the world financial system, those of us in the microfinance sector certainly want to link ourselves more. So with microfinance, it's not just providing group loans to women anymore. It's trying to provide a full solution for the poor clients. So from the group loans that everyone knows about for microfinance, all the way up to graduating them to individual loans and then beyond. And then linking them also with different products such as savings and insurance. So really trying to be a full service providers to these women and more than a few men at this point.
I'm glad you mentioned women, because certainly when I was in Kenya, there was the statistic being bandied about that over 20 million people are unbanked and that you really need to tap into this. And there was the emphasis on women, and particularly women in agricultural economies in rural areas. Should that be the approach?
Right. Absolutely. I think a lot of us, our passion is for rural women. The issue is how to bring it to them cost effectively. So as you know, Loretto, it's very expensive to send a loan officer to go hike up a hill and distribute a loan to one woman on the top of one hill and then the next day hike to another one. So we're very excited how technology, especially mobile phone technology, will link with microfinance so that we can be able to provide these services much cheaper, such that the women don't have to have our loan officer come, for instance, and pick up the loan, but she can send it through the mobile phone network and then reduce our cost. So that's one key area. Another area with innovation would be training on the front end. Training women with agriculture and taking risk on that. It's expensive in the front end, but over time, that woman will repay very well. And that's the way the industry is going.
The whole concept of cooperatives and whether you should be lending to a group of small-scale farmers, women in small enterprises, or individuals. How could you do it better?
Great question again. The group loans are usually where women will start off with us. Now sometimes in very rural areas where there are not markets where the women can sell their goods, perhaps lending to a cooperative is the best start, so that the women can get used to saving together and then how to use financial management, basic skills in repaying and whatnot, and then approach a microfinance institution to funding groups. So now some innovative programs such as Maono Economic Development here in Kenya, for instance, is actually trying to lend to these cooperatives, and then the cooperatives make the loan decisions themselves instead of the microfinance lending first. And then when those women graduate, well, then they would go on to a traditional microfinance.
I want to tap into the knowledge you've garnered from your experience heading Kiva Microfund in Asia, for instance, because we're told this is where microfinancing has worked phenomenally well. We all know about the Grameen Bank in Bangladesh and perceptions of risk.
Exactly.
There's this idea that when you lend to the so-called poor, they have irregular income, sources of income, they're in the informal sector, they're high risk. And yet in Asia, consistently has proven this is not really the case.
Absolutely. And then, but keep in mind, Loretto, that Asia also has a different culture with regard to repayments. So microfinance has been in Asia quite a bit longer. So people are used to it, and it has filtered more into the rural areas. So you can see these 1%, 2% delinquency rates, where meaning 98, 99% of the people repay. Where in sub-Saharan Africa, it's a little harder to do that because we have to train different rural populations in how to do microfinance. So we expect to get those good repayment rates after the women have gone through such training for a number of years.
What's the role of the central bank in regulating microfinance institutions? I know a lot of work is being done in Kenya, especially with issues like agency banking, for instance, but there is a sense that it's been a highly unregulated sector of banking. It's high risk, as I mentioned earlier on, just by way of loan impairments. And that there is the risk of usury, for instance, because you don't have the central bank monitoring interest rates and the repayment rates that come through within the sector. Is that a wrong perception?
You're absolutely right, but we need to realize in Africa, we're very blessed with central banks. In Asia, for instance, Southeast Asia particularly, central banks are very tightly controlling the microfinance sector, maybe with restricting the number of districts they might open in or how they accept foreign debt, for instance. The African central banks have become much more liberal in how they deal with microfinance. Now, if we take an example, for instance, Rwanda, they used to have a very, very flexible approach to microfinance, where a microfinance institution, up until about 2006, would only have to have about $9,000 in equity to take savings. And then through 2006 into 2007, the central bank increased that up to over $350,000. So there would be more of an equity cushion. So yes, central banks were lax, but they realized that, and they're very proactive in fixing that. And most of the central banks in Africa do not overreact, perhaps as some would argue that they do in Asia.
Financing for SMEs, this has become the real talking point, the bugbear, if you like, for instance. You know, South Africa's president recently delivered his State of the Nation address, and the core issue for him is jobs, because we've got unemployment in the region of 24%, and it's similar statistics in other leading African economies. SMEs direct about or create about 90% of jobs in any economy, and yet they struggle to find credit.
Absolutely. SMEs are in a tight spot with commercial banking going down into the middle markets and microfinance serving the micro. SMEs are left out of some financing. But I commend people like Barclays Bank, who's actually trying to hit the SME target. And they realize that it's high risk to lend to these SMEs. So they send their SMEs, for instance, into entrepreneurship training. And they take a year-long course in entrepreneurship as they get the loan from Barclays, and that lowers their risk. They learn about best practices. And there's an innovative consulting group in Nairobi, the Wild Group, for instance, that actually Barclays partners with to do this. So banks are interested. I would say that's coming up. I don't think we've quite reached where we want to be.
I'd like to bring our guest host into this conversation. One of the biggest criticisms leveled against bailout strategies, for instance, Quibi, in the United States, is you're bailing out big banks with wide asset networks, for instance, whereas it is smaller regional banks that would be lending to SMEs. So ultimately, the problem of joblessness is not sorted out by these asset relief programs, because you're not actually targeting the institutions that would actually create the jobs.
Yeah, and that's specifically important, I think, when you look at emerging markets. In developed markets, remember that what the central banks have been trying to do is they're trying to save a system. So they're saying, okay, what are we going to let go to waste, and what are we going to try and save so we can try and save the whole system? And then there's some rules that apply, and some people fall by the waistline and some people don't. Which is kind of unfair if you think about it, but quite frankly, you know, they need to do something to save it. But certainly if you look at within an African context, it literally is these smaller financial services organizations that provide the job creation and the employment and so on. And remember that the risk that they're assuming is so much higher. So, and for that, they want to earn a higher rate of return. So if you just take what a normal bank will provide you as a line of credit and what the rate of return that would be, they would want, or rate of interest, you know, what the micro lenders are trying to do is they're trying to earn a higher rate, because they're assuming a higher risk for, you know, for doing so. The question is, how regulated is that? Because at some level you could actually kill entrepreneurship by providing a financial product to somebody that's illiterate and where they don't actually understand the implications of the interest they owe.
When you're looking at a fairly advanced economy like South Africa with very sound banking infrastructure, commercial banks tend to dominate the space, and only recently are we seeing micro lenders come to the fore, or smaller banks coming to the fore. How much more potential is there?
Well, certainly, I think the big banks in South Africa have kind of took the secondary and the third market in South Africa and kind of didn't think about those. Kind of thought about primary banking, and that's where we got the micro lenders, which we call smaller banks today, the likes of African Bank and Capitec and so forth. And those are providing a very valuable service. And as a matter of fact, if you look at the finance charges that they charge relative to the large banks, they're actually comparable. They're assuming a little bit more risk. But remember that South Africa, because it's a more formal economy, it comes down slightly on the risk scale. Now let's just supplant that somewhere into Africa. A slightly different situation. We've seen some South African micro lenders or smaller banks really getting burnt up in Africa because they just don't understand the risk that they're assuming. That's where Grameen was so successful, because they went and they said, do we understand the social fabric of society in India? Yes, we do. How do we lend into this, and how are we, at least from a risk perspective, going to get our money back?
Final question to you, Jeffrey. We talk about microfinance. What about micro savings? We're told this is really the limitation of Africa, is we're not very good at putting money away. And again, going back to Asia, this is apparently the strength.
Absolutely. If we look at a country such as Uganda, the savings rate as per the gross domestic product, the GDP, is only 10%. Whereas if we go to East Asia, we see it over 40%. So absolutely. So I think there's two issues. Number one is increase the savings rate, but also increase the access to it. That's why this mobile phone technology, such as here in Kenya, we have M-Pesa, we have EcoPesa, all the phone companies do it now, where people can actually save on their phone. So now we see a challenge to the microfinance savings industry from mobile phones.
Thanks so much.
Which is something we never would have expected.